Sylvia, thank you so much for making the time to speak with me. I've been really excited about this conversation because I work a lot with tech clients, early stage tech clients, so typically anywhere from angel all the way through to Series C, and typically who are building go-to-market teams. And so getting your perspective from someone on the investor side of the relationship, I think would be really useful to help to give maybe some advice, some guidance, just some observations around what's going on in the marketplace from an investment side that might help people to go and do a better job of scaling their tech startup. Could you please, for anyone who doesn't already have the pleasure of knowing you, introduce who you are?
Absolutely. Thank you, Rachel. My name is Silvia, and I work in the financial and investment industry for almost 10 years now. I have the honor to say that I've worked for the largest alternative investment fund in the world and for the top consulting company for almost 7 years now. Currently, I'm based in New York, and here I set up my own consulting company. But along my experience, I work on 3 different continents, on 6 countries. So I guess, and right now, most of my clients are venture capital funds, investment funds. So I hope I can bring some insights to your audience.
Yeah, 100% you will do. So Sylvia, you've worked everywhere. How many languages do you speak?
I do speak 6 languages and I work in 6 different countries. That's a coincidence, actually.
Amazing. Cool. So what I think one of the big things that would be really good to start as a conversation is it's really challenging in this marketplace to go and raise funding. And I've seen some data that Series C companies are only worth 54% of what they were this time last year. So there's a huge downgrading in terms of valuation of tech businesses. So it will be really useful to understand your perspective on raising money, and particularly continuing to raise money during those early startup rounds.
Absolutely. Fundraising was always challenging, and that's the core of the business, because if you don't have money, you don't have business. If you don't have clients, you don't have business. And especially the follow-up rounds, when we speak about Series A onwards, this is becoming even more challenging. Why so? Because at the early stage, you may be able to convince a few friends. You may be able to convince to pitch your idea to a couple of angels. They will believe it. They will find it exciting because at the early stage, they invest in the founder. But when it comes already about the follow-up rounds, about the Series A and onwards, it is already about the numbers. It is about the quality of the business. Here, you can already feel the sense of the business. You will have probably at that time, you'll have a couple of contracts in place. You will have some database with the customers. And the investors will be looking at the different metrics that at the early stage there are. So at the early stage, you look at the founder idea and so on. While here, you'll be looking at financials. You will be looking at customer retention, customer satisfaction, how effective your marketing campaigns are. How do you attract your customers? How do you retain them? How are you planning to actually deploy the capital which they want to give it to you? So for them, it's very important. The only reason, of course, like everyone wants to predict the future, but this is impossible. So the only way investors can take some conclusions is actually to look at the past and to predict what are you going to do in the future.
Yeah. Amazing.
And this is when, and regarding the valuation part, this is like the valuation are going downwards. And the issue here is that because founders try to raise the initial rounds at the very high valuation, and they have to downgrade it. They have to go backwards and to revise the evaluations, because the valuation has to be supported by your performance. If in the first round you said, I'm gonna attract 10 customers and I'm gonna have this database and I'll deliver this quality, it didn't happen. So this is where we stand. So let's revise the valuation, and that's how it goes actually.
Yeah, amazing. And because the world that we work in is very much about building the go-to-market engine, and a lot of that's around the people and the structure. What are some of the things that investors are really keen on and very deliberate in questioning around things like what needs to be in place in terms of the structure? And if it's not in place, how are you going to see that they are going to spend that money in the right way to have a predictable revenue engine that's likely to deliver a return?
So the first thing investors will look at is the team structure. And it's important for the founder to understand that this is not one-man show. While you can be a great founder with an amazing idea and you may have great initiatives, but you may overestimate your time and your skills, in fact. So the hiring process and the team structure, starting from your co-founder, is very important. And I would even say that investors are very keen to see a co-founder. Again, from the same purpose, is they don't want to see it as one-man show. If the founder cannot run the business, who is going to step in? And starting from this idea, basically then your entire team is the core of the business. Who do you hire? How do you hire? And the expertise of your team. Okay, you work in tech, you work in SaaS. Who are your engineers? Who are your designers? Where do you source them from? And at the seed A onwards, it is very important, like you already must have a team in place. You can always work with freelancers, but the investors would really want to see the team in place. And this is like the challenge comes on: who do you hire? How do you hire? Do you move on with the freelancers, or do you bring in some experts? I will probably say that freelancers is amazing. But this is, at some point you should have a core team in place in your business. There is another option where you can bring in very experienced guys, like big corporate companies. You can bring experts from big corporate company, but here you should be aware that they will come with completely different standards, with different expectations. So they are used to see a corporate governance structure in place. They will try to adapt it to a more corporate style, and this is when your business may slow down. So you may not really, especially in the tech field, you may not really resonate with this type of specialists. And I think in my opinion, the best profiles are the ones who wear different hats. So people who have experience in both startups and corporate, so they can mix and blend your skills. So they can come with some expertise because they've seen it on the corporate side, but they can adapt also to the pace of your startup. So they can move faster and take faster the decisions.
Yeah, that makes perfect sense. We see it all the time. A lot of startup owners and founders and directors won't even look at someone who's only worked at big corporate, just because they're used to completely different levels of resource and
Absolutely.
process and maturity. But a lot of the reason why people want to get out of big corporate is because of all that red tape, because it's so slow, because it's so hard to get things done, because it's so hard to show an impact. What a lot of people look for in my side of this fence is someone who's been part of that journey from X to X. If you're looking to grow from 5 to 25 million, who's got proven track record of what that journey looks like, rather than someone who's been used to working in a 25 million pound business. How does that reflect your experience?
Absolutely, yeah. That's what I would completely resonate with what you're saying. People who see both sides of the business and who can easily adapt, because as a startup, unfortunately, the time is crucial here. So you need people who will be committed, but you also need people with expertise. So the hiring process is really crucial, and the team structure.
Yeah, okay, amazing. And so what else is available? So let's say you're a Series A plus company. Outside of VCs, what other routes of funding are available?
There are so many options. It depends on where you stand as a startup. Even like before going to a VC, you have to understand how a VC works, and there are different types of VC. And usually, I'm saying I'm splitting the investors in 3 tiers. So first there will be VC, second there will be angel investors, and the third will be family and friends. Usually, sure. I would say you go first to family and friends. So when you are at the early stage, then you move to the first year, you go to the VCs, and then you move to the second when you go to the angel investors, because the VCs have the expertise and they can come in not only with money, but with the network. They can come in with so many valuable resources. And the angels, once they see on your cap table a VC, they will come by themselves because they feel more secure. They are operating on their own. Besides that, there are so many other options that can be, it depends where you stand. If you have traction, if you have fixed contracts in place, you may even consider any type of financing which is looking closer to a debt rather than investment, something where you don't have to give up on equity if you already done so and you don't want to give up anymore. Where there can be different type of investors, not necessarily VC, because VC is like is also very structured, and if you're not operating your business properly, they can kick you out of your own business. So you should be ready, you should have everything in place before going to a VC.
Yeah. Okay, cool. And have you seen a big difference, like in your experience so far, of what amount of investment and then equity VCs and angels used to want and how that's maybe changed now?
I think they are very flexible in terms of how much equity, and there is no one size fit all, unfortunately. Depends on the idea. I've seen many VCs who will go with higher valuations or who will accept much less equity than they used to before, just because they love the founder, just because they found a unique idea. Basically, this is the purpose of a VC, to come with something non-consensus. This is when you are a successful one. Something, you discover something. Everyone wants to feel like they have the unique project. So in such cases, it depends where you stand, but at the Series A plus, they may accept lesser equity. If they are on the follow-up rounds, also this is another important factor. So if they were your initial investors and now they come with the follow-up rounds, they may have even more flexibility.
Yeah. Okay, amazing. Talk about investors and do's and don'ts. So what, in your experience, are investors looking for in tech startups?
I think they don't want to go with a popular idea, but they want to go with a unique concept. So this is where a VC would look at. They would love to see something unusual. They would love to see a committed founder, great team structure in place. They would like to understand, the product market fit is another very important one. They would like to make sure that you know your customer. This is the very first thing, that you know a customer, that you went on the market and you tested it, that you collected some feedback. So this is something you do. What I would say you should don't do, especially when you pitch an investor, talking about the market size. Okay, like the market size. There is market. We all know there is market. There is a huge market. What's your specific market? How much of the entire market you're able to convert? Because all other part of the market becomes irrelevant. So nobody would look at that. You need to focus on to understand your client, to go on the market and to try to identify, okay, this is my target. This is how much I can retain. This is what I need actually to scale and why it takes me to get there.
Yeah.
So usually pitching the total market size and all this it's something where you lose the investors.
Yeah. This is a $1 trillion market, and if we could just get 0.1%, then okay.
Exactly.
Yeah, exactly. Okay, cool. How often this is maybe a curveball, but I'd like to just understand. So how often do you see startups talking about what their market is, and it's completely different to the actual current book of business that they have? So how often is that market an aspirational market that they want to get to, maybe into enterprise, versus the reality of where they're selling today?
Depending on the founder again, but it happens all the time with non-experienced founders. They will always want to pitch because they are big numbers. So you always want to pitch the numbers. And when you actually go into a due diligence process and when you look at it, you understand it's completely different. And it is a startup. So we all understand that you cannot predict, you cannot have like a clear picture. But from the Series A already, you went to the market. It means you already tested it. You already know it. So this is actually, if you see it in a pre-seed level, is not a big of an issue. But when you see it at the Series A, when you understand, so this is a complete turn off for a VC. When you speak to a founder and they still speak about the market size, which does not exist, and they know it. So we are actually looking at each other. We know we're lying to each other. And we are continuing the conversation. So this is when this is not true. I know this is not true. So let's talk business. So if we talk money, let's talk real things.
Yeah. And what's the flip side? So what does good look like?
I would say, to actually attract the financing, I would actually, again, focus on numbers, but on the real ones. And specifically what happened is, okay, look, this is one example can be, which I've seen a great founder. Okay, this is how long it took us to gain the first client. Okay, it took us 90 days to get the first client, but then the second client, it took me 30 days. But the third client, it took me 1 week. And afterwards, clients came by themselves because we have such a great reputation and we see clients keep coming. I don't even have to interact with them. And that in the books, right? Or you can hear great feedbacks. I've seen also the team again is another a very important part of it. I've seen VCs actually going to the team members and speaking to them without the founder knowing it, asking about their reputation, asking about how happy they are in that startup. So that's why it's very important. The team is very important. How satisfied your team is, your co-founder, and so on. So this two, when you speak numbers and when you speak, because you do business, but you do also customer relations and you do human interaction, right? So I think these two components are very important.
How often is it that people spend all their time preparing decks, financials, and then completely neglect to prepare their team and the organization that they might well be a big impacting factor into whether they go and get funding, or maybe even how much funding they get?
Unfortunately, founders spend a lot of time on actually preparing for the deck or predicting how the meeting will go instead of focusing on the business, on the hiring process. And this is the key. And this is the engine of the business itself. The quality of your team, the satisfaction of your team, the payroll is very important. How do you remunerate and how happy your team is with you? Because otherwise they will leave in a very short term and you will end up at the 0.0 again. Absolutely. It happens quite often, but I hope I will see it less and less.
Makes sense. We recently worked with a client who was going through a big funding round, and we helped them to build their scaling plan. So what, from a people plan, will they be doing in terms of the types of people they'll be going for, how they'll be going to market, which different recruitment channels, what would the process look like? In your experience, what are the sort of big questions, the most common questions that a VC would have about a team's hiring and scaling plan that they will use to determine whether they will invest?
They would like to understand the team structure, and they would like to see, actually recently I've seen they are focused on the results. They would like to see what has been achieved right now, and they would ask your information and they will see what was the remuneration, how much did you pay the team, and they will link it directly with the performance, and they will understand how good your team is or how good your management skills are at hiring the right team, and if you can link the right talents with the right remuneration and to scale your business. So this is very important.
So market insight. So I get asked regularly by clients, what's going on in the marketplace? What are you seeing? I'd love to understand from your perspective, being a New York-based investment expert and coming from Dubai, what are VCs most excited about right now in terms of tech? Which verticals, which parts of tech are most exciting?
All right. I think there is a lot of buzz around AI, and some other founders get intimidated by this concept if they don't have an AI project, and they may be scared, they may be confused, they may want to switch and to tweak their business to put some AI component. This is a great idea, but in fact, specifically at an earlier stage, I would say that surprisingly, VCs don't invest in AI projects. VCs invest in unique concepts. If you have, of course, that this is another trend. So AI, in fact, is just the evolution of technology. And in very short time, AI will just be a component of a business. It is not a separate business. So this is what we have to understand. For those just starting a business, I would say that it's great to have an AI component where you can incorporate it, but don't get too fixed on it, because VCs are afraid of AI businesses, like pure AI businesses. This is too risky and this is already not common. This is just another step in technology evolution. This is just another trend, and this will very easily become outdated. The same way other trends became outdated. It was like recently it was with NFTs, and now we see where the NFTs are. So this is just another trend. But I guess VCs are getting excited about the unique concept, about the desire of a founder to actually continue and to actually with the great vision, and not only the vision but the great plan, actionable plan which can be applied. If you have a component where you can automatize it, where you can bring an AI component, this is great.
And which other parts of emerging technology are drawing interest from VCs at the moment?
Tech-related projects are always welcome because this is the future. It's just a matter of finding the problem and coming with the right solution instead of creating another problem. So this is a big issue. Sometimes founders tend to create the problems where there is no actually problem and come with the solution to non-existent problem. The successful ones are the ones where you clearly identify the problem and you come with the real solution. It can be a fintech, it can be whatever it is, it can be a SaaS, it can be a simple e-commerce, but if it's brought in the right way where you can solve a real problem, is always welcome. And VCs are looking for unique ideas and they are open. Most of them are agnostic. Most of them are open to different projects as long as this is real, this is scalable, and this is a real business, not only an idea.
Yeah. Okay. Amazing. And I know we've had a bit of back and forth around this in terms of female versus male, in terms of leadership positions, but also within funding. And I saw a company bragging yesterday on LinkedIn about having 26% of their workforce as female. And I thought that's literally the industry average, and it's half of the population. So in your experience and stuff that you've seen in terms of data and reports, what's the gap between capital being deployed into male founding teams versus female founding teams?
Unfortunately, last year in 2022, only 2% of VC funding went to female funded startups. There is no clear information on how many female actually pitched. Fortunately, there is no how many of them had successful projects, how many applied to pitch on VC, but we know that only 2% went. However, there is also a statistic, at least in the US, that 42% of small businesses are owned by women. So there is definitely a huge gap. This is not monitored and there is no clear data, but there is a huge gap in the financing. And this is an issue which we are fighting. And there are I guess less than 8.5% of Fortune 500 CEOs are female again. So there are issue on the leadership level and on the funding level with the gap on female.
Yeah,
and if I had to say about the issue of it, and the reason I think is because it's related to our evolution, and I think is the perception which we have about, we create a picture in our mind how a leader should look like. And unfortunately, historically, people unconsciously imagine that a CEO should be the next Jeff Bezos or the next Elon Musk. And they automatically imagine that a successful entrepreneur, that's how it should look like. However, this is not a standard. And there are some sayings also. Imagine a CEO, which is again about the stereotypes. Imagine a CEO. Is it a man? Imagine a feminist. Is it a woman? Imagine a nurse. Is it a woman? Imagine someone crying in the office. Is it a woman? So this is all about the stereotypes which unfortunately are built historically, and this takes time to be changed.
Yeah, absolutely. And I know that you're obviously someone who's a big supporter of this, and you're building a massive career for yourself beyond the kind of standardized way that it should work within your culture. What advice would you have? So from the female founders that you do speak to, what's the advice that you would have for someone who maybe is thinking about investment, is thinking about how to scale their business, and maybe just needs a couple of ideas or a bit of inspiration to help start that journey?
I've noted, and these are again some statistics, that those 2%, which is minimal, but the funding goes to female-led projects with social impact. So it is much easier to attract financing if you come with social impact. So I would say for those starting, if let's say if you speak about tech, we say to incorporate some AI in your business. For female, I would say, unfortunately, you still have to go with social impact. And this is a trend, and this is something we as women do to create some social impact. And I will encourage them to keep doing that if they can do some social and some ESG in general, like to environmental, social, to improve somehow. It definitely increases the chance of getting funding.
Yeah. Okay. Brilliant. And what would you say as to founders who are thinking about, I've been so busy building this thing that I've not gone and really created any kind of opportunities to go and maybe speak to strangers, go and get involved in different communities. Maybe it's even around different founders. So in what way would you suggest that a founder can utilize communities and networks to help their chances of scaling their business?
This is crucial. So one of the business success is the key to a business success is actually to listen to your customer, to listen to other people's opinion, and to try to improve. And as a founder, sometimes you may spend so much time actually working on the project that you forget to go out and to ask for feedback, which is a very important component of it. And when you go out, for example, if you spend time with your friends, they may be working in different field, they may be doing something different, they may not understand your family, won't like to discourage you. So you need to step out and to listen to what other people are doing, and probably just not even pitching, just presenting your idea, just asking for an honest, genuine feedback. This is very important, and honest feedback. And this always happens with the networking. It always happens with the community events. To be part of a community is very important for the founder, and because you share the same ideas, you share the same thoughts. Actually, myself and a friend of mine, we initiated a community of founders in New York, which is about to kick off. The very first event is going to happen tomorrow, actually, for the exact same purpose. He's a founder himself. I'm a founder. I'm a female founder. He works in tech. So we understand the struggle, and we understand, and we want founders to understand that they are not alone. And you need to go out, you need to speak up and to share your issues, your problems, your challenges, the challenges that you are facing. This is very important. Most probably other founders are going through the same journey.
Okay, amazing. So we're wrapping up now, Silvia, but I'd like to understand, if someone wanted to speak to you, where are you going to be the next sort of couple of months that they might be able to come and meet you, and how can they get in contact with you?
Absolutely. I will be mainly based in New York. I'm traveling San Francisco, New York. So this is where I will be working on different projects, supporting different startups. So I'll be mainly found in the US. However, I'm traveling quite often, and I'm the most available. I'm on my LinkedIn. So always happy to touch base on LinkedIn.
Beautiful. Silvia, thank you so much for your time. It's been an absolute pleasure.
Thank you. Thanks to you, Rich.